Hello guys, welcome to this week's video, and today we're going to be talking about forecasting, why it's important, what it is, and how to do it very simply to set up your day of trading. Now, what is forecasting? A lot of people think forecasting is trying to predict what's going to happen, and to some extent it kind of is, but what it really is what you think might happen in terms of your own strategy, in terms of your plan. So if price does this, then I will be able to look for trades and entries in those areas. So it's about planning your day. So once you've done that, you've looked at the higher time frames, looked for these zones that you will trade from that fit your plan, you can set alerts, then just go about your day. And this will save you from just sitting on the 1 minute, over trading, taking silly trades that don't fit your plan, because you've already laid out the plan for the day. So yeah, just going to go through how I forecast. I forecast every morning. I post it in the Discord. And yeah, it's just a great thing to add to your routine if it's not something you do anyway. All right. Okay guys, so I'll have gotten to my charts in the morning. Let's say it's around 6:30, half an hour at least before my session starts. And I'm looking to see what's happened between the end of my session, which was around 4 PM GMT the previous day, so around this point here, and what's happened overnight during Asia, and where we are right now in regards to price. Okay, so starting with the 15-minute, I'll mark out any structural breaks that I've missed. You can see already yesterday we'd mitigated some kind of 4-hour extreme over here, which I'll go through in a minute. And now you can see, so my session would have ended somewhere over here, and I can see now that we've actually broken structure to the upside. So this was a major high, swing high over here, and you can see we can mark that break a structure on there. So okay, so we're officially bullish on the 15-minute time frame. Okay, so now what I'll be looking for is, right, so we've got our new swing points. We've got our swing low down here and our swing high. Okay, so we're up to date with 15-minute major swing structure. Now I'll just go back to the 4-hour just to check what's going on there. So previously forecast would have been that we had this large 4-hour bearish leg. We came up into the premium, mitigated an area of that leg, but we also created minor structure down here on the 4-hour, and so we broke structure bullishly, and we're currently still bullish with minor structure on the 4-hour. What we also did with this minor structure was we had this break here, so we created a high here, broke the low over here, and then we had this bullish breaker structure. We came down, failed to actually mitigate a zone, did mitigate the discount, but failed to actually mitigate this inside bar zone before continuing up, failing to close above this high, sweeping it and tapping into this zone over here. And now we've come down and swept all these lows, this inducement that was formed, lows that didn't mitigate a valid zone, I see as inducement. And it's come down and it's tapped the extreme of this wick over here. So on the 4-hour, we are currently still with minor structure bullish, and we've tapped into the extreme of that, and we've had a change of character on the 4-hour. Okay, so looking at this, you know, there are still plenty of unmitigated areas above. If we failed, we've obviously failed to break the minor low so far, and it's caused a 4-hour chock and a cemented 4-hour low down here. So that could signify that price needs to come higher up here in order to break these lows. So yeah, there's cases for higher prices on the 4-hour, at least up to these areas up here in this substructural leg, and the case that we changed character on the 4-hour and had a very strong kind of cemented low down there. So okay, yes, cases for longs. And now if we look at the 15-minute, I want to map out kind of what I'm looking for in the day. Okay, so I use premium discount a lot. It's a big part of the strategy at MagicFX. And because currently, if we look here, we've broken structure up and we've cemented a high over here with a candle that closed below the candle to its left. The idea, once we create new major swing structure, is that we will get a major mitigation. That is the expectation. And I did a post on Instagram. Follow me on Instagram if you don't already, because I do give a lot of value on there as well. And I did a post about expectations, and trading is all about what we expect to happen. We never know what's going to happen, but we have to have expectations in order to in order to know where we want to enter the market, to know where we want to exit the market, and just to determine our bias and which direction price is going to go. So my expectation is when we break a major swing high, we're going to get a major discount mitigation. So I'm expecting price to come at least down to this discount down here. And as you can see, we've built substructure. We had a change of character down here. So we have officially broken substructure down here on the 15 minute. And now we would expect a pullback into the premium of this substructure in order for price to then continue down and mitigate something in this discount area. So what I'm looking for is to reach this premium and then for price to come down. So what I would then do is label out, okay, so we've got a zone here, obviously. That's kind of our first zone that sits in the premium. And a lot of the time you'll get a nice reaction from the very first zone in the premium. You can also look at the internal structure within that as well. If we're looking at price coming down here, down here, down here, and then we don't break until this point, and then it's just kind of like this. So okay, that's our second leg. If we're looking at crossover zones, we can see that zone falls in there as well. Not too much of a difference. But what I would then do is go down to the 1 minute as well, just to check out to see what makes sense on the 1 minute with regards to zones in this 15-minute premium. So I'll be going down, checking out what makes sense in here. And for some reason, TradingView taking a long time to load candles these days for me. I don't know if that's an internet problem or a TradingView problem. I could edit this out, or I could let you suffer with me. There we go. Anyway, so this is the top of that 15-minute leg, and then I'll just kind of follow order flow on the 1 minute. So you can see we had a major break structure here, mitigate to the premium. Okay, fine. So that leg's done with. We had another bit of major structure here. Valid zone just about mitigated to the premium. Exactly on the EQ, in fact. Okay, so still a case for maybe price to come in here, but it's technically mitigated to the premium with that EQ mitigation of a valid zone. Okay, fine. So next leg in this 15-minute premium. All right, price came into this 1 minute, mitigated something and broke down. Fine. The next leg, this high and this low. And it's like, right, okay, come down, we have tapped into the premium, but oh, hold on, we haven't actually tapped a valid zone. So what does that mean? Oh, probably this is going to be inducement for price to come into this zone. So okay, this gives me confidence in this, that this is a decent zone, so I'm going to leave that on as a nice zone to look for trades. And I didn't really see much else up here with regards to this in order to take a trade from, and there was possibly that other 1 minute leg that was mitigated to the EQ, and that was this one here, and we can see that this zone has this inducement below it as well, so you know, it's decent, but this one for me looks like a very tasty zone. So then I would think, right, so what I'm looking for is for price to come, mitigate this. If it gives me an entry in here, I will take a short. And my expectation, because now looking at targets as well, where do we target? Where do we know where to target? Well, that our expectations come into play there as well. And because I'm expecting it to come down into the discount, I will target, and you can either, it's up to you, target a specific zone. So that would be this zone here, or you can just target the EQ. Depends how, I guess, greedy you are and how much you think you want to take from the trade. I like to be fairly safe with my trades, and I know that price a lot of the time comes down to at least the EQ. So I would target that, okay? I know if I get in with a 1 to 1.5 pip stop loss, it's a 1.5 from here, come on. You can get a good 20, 21, 22R from that, and that will do me nicely. So there what I'm kind of looking at is either this or price to sweep this, come into this, give me an entry there as well, and price come down here. Now on the other side of the story, I'd be looking for price to come and tap a valid zone on the 15 minute. So, you know, a valid demand zone. So first one that springs to mind is this one. And I would also I'd do the same thing, looking on the 1 minute, see if there are valid areas in there. Now, this one looks pretty good because we can see, you know, it's a, excuse me, it's a flip zone. Price tapped into this, had a reaction, and ultimately broke the structure from there. And there are also other kind of flip zones in here as well. You can see there was a reaction to this here, price tapped in, reacted, and then ultimately broke through. So you could say there was a bit of this, and also a bit of this, and various zones in here. But overall, what I would do is go down to the 1 minute and check out zones there in the exact same way that I checked out price up here. So yeah, now setting up my London session, I know that unless price comes and taps into this area up here, or comes down and taps into an area down here, then I'm staying out of trades, because nothing else would really make sense to me. Now there are other things that I haven't really covered in this that could make sense to take trades from, but keeping it as simple as possible, like this, and just targeting those high probability areas, are what will separate you from people that just sit on the 1 minute and get all emotional, looking at all kinds of movements in price, getting FOMO, and taking all kinds of shit trades. So yeah, try this out. I mean, really what you need is a good strategy, and understanding of price, and understanding of what you're looking for in order to forecast properly. But it's, you know, keep it simple, high probability areas, and just take trades from there. And if the areas don't hit, you don't take the trade. You don't need to be in every single move. There will be high probability moves every single week. Okay. So yeah, that is basically what I forecasted this morning. What ended up happening was we tapped into this zone, we got a nice entry, and price did exactly what we thought it would do and came nicely down into this discount area. There was also, once we just about tapped into this zone, there was also a nice possibility for longs in there. I'm not going to go over the 1 minute entries in this video, but you get the gist of what makes a high probability trade, what the value is of forecasting these things, because if they don't happen, you can just stay out the market. You can go for a walk, go to the gym, work on a side business, do whatever you like. You don't have to be sat there on the 1 minute or even on the seconds all day long. So anyway, I hope you found this valuable. Happy trading, and let's have a great Q3, everybody. And I will see you next week.